Hello, welcome to the Money Adjustment. I'm your host, Dr. Marc Kramer, DC. I am a chiropractor who loves investing and trading. Are you interested in what's moving markets and your money? Great, me too. Let's get started. Hey, everybody, I'm here with my guests, my confidant in investing and trading, and honestly, the person who got me into investing and trading many a moons ago, and my childhood best friend, Harry Yesilevich. Harry, say hello to everybody.
Hi, everybody.
just so you don't get too nervous, we're not live, so some of this can be edited, but I think it's gonna be a keeper.
I do too. And I'm not that
I do too.
nervous because I'm talking to a good friend, and I'm just going to look at it from the perspective of you and I having just a normal conversation, and hopefully people will get something out of it and have a good time along the way.
Oh my gosh, you were born for this, Harry. So that was a good introduction, actually. Harry is legit. How long have we known each other, Harry?
Oh my gosh, first grade, second grade?
Yeah.
I
honestly, I think I met you in the third grade, but I know I knew you before I met you because you used to go over to my neighbor's house, the Pastilniks.
Yes, I do. Yeah. You shared a wall with them.
I did share a wall with them. So I could look out my backyard and I could see you playing in the backyard with everybody.
You think people would actually rather just hear about our childhood stories versus our approach to investing? Because that could be an interesting podcast in and of itself.
See, Harry is going to keep us on track. Harry is going to keep this thing going. All right, so I love this. We are going to talk about, I was going to do prep work, but you started this call early on me. But we're going to talk about Warner Brothers, which is actually relevant because today it's making news. And to be honest with you, I don't even know what the news is. So maybe this will be good because one of the cool things about Harry and I, and one of the reasons that, outside the fact that I've just known him for a long time and we both are into the market, is that Harry's style of investing follows more, or his strategies for trading follow more of a fundamentals approach. Meaning Harry likes to look at the sales and earnings per share and pay attention to financial statements and news and catalysts. And versus my approach, which is technical analysis. So I care about the fundamentals just like Harry cares about technical analysis, but that's not how he's finding his positions. And that's necessarily not how I'm finding my positions either, but that is how I strategically trade them. So we'll talk about two stocks. One will be Warner Brothers, which is, like I said before, making the news today. And the second stock we'll talk about is Unity, and see if I can maybe help other traders that are having the problem that I'm having. And I'm like confiding in my best friend here. So, all right, let's start with
let me throw this out there. It's going to be a good yin and yang because I'm happy because I invested in Warner Brothers a while back, and maybe I could share that with everybody on the reason why I did it a little while back. Well, I'm in a happy place. Unfortunately, Mark's probably not in as much of a happy place. We got a yin and yang scenario going today. Interesting part was like maybe a month ago, I was not in a happy place because the stock wasn't doing what I thought it was going to do, which is when I originally invested in it. And I started doing a little dollar cost averaging along the way as it was dropping on me because I still felt pretty comfortable with my thesis and it played out. It is playing out right now. I didn't know what that catalyst was going to be, but there was a catalyst today, which happened yesterday, and I could speak to that a little bit.
Is that for Warner? Is this regarding Warner Brothers?
It was regarding Warner Brothers, and I know we're waiting for the catalyst with Unity. So it's funny that although we trade differently with our approach, we're still looking at some of the same things to happen to drive the stock to the place that we're thinking. So still at the end of the day, it's interesting how you can have different approaches, but really what you're looking for is the same result, right? Make some money.
100%. I love that. I think that's a good segue. We'll just jump into the charts because that's what I like to look about. And actually, while I'm pulling up the chart, why don't you tell me the fundamental, like, why don't you tell me your thinking behind your trade with Warner Brothers?
So one of my approaches, and I've got a few, but one of the ways some stocks get on my radar is if it's a product I use, and then I dive into it and think about, is it something I want as a long-term play, or is it something that I think there's an opportunity for a short-term play? For Brothers, as you may know, one of their affiliates is HBO Max, which I use, and I was a Game of Thrones fan, and I think I've had HBO Max for 20 some odd years at this point. So it's something I'm paying into as a user. So that always gets something on my radar. Is this a good company? It's got viabilities, and there's still room for growth. They're going into streaming, and we all know streaming is pretty hot. It's something that a lot of companies are focusing in on and driving revenue that way. And they're a big organization with a lot of affiliates, and it was taking a hit for the last, I think, 12 to 24 months we'll be seeing. And I just thought, this is a company that's not going under. They've got good products. There's going to be a turnaround. What that turnaround is going to be, I don't know if it's through consolidation, a merger, or something, but I felt like something was going to happen. So it got really on my radar around $11. Started buying a little bit at $10, and as it kept dropping, I kept buying more, and even bought some shares at $7.50, something like that. So my dollar cost average at the end of the day was something around $7.80, and then yesterday it popped. And the pop behind it is there is some information getting out there. They're going to, I think, sell off pieces of the company, or maybe spin them off into other companies. I don't know the exact details of how they're going to do this, but that's what's hitting the market and driving the stock up, because it's one of those scenarios that's similar to what GE did, I think, last year, when they spun off parts of its business models. They become more efficient, they become more profitable as individual organizations. It drove the stock of GE, and that's what's happening, I think, with Warner Brothers.
Okay, so what I got is you dollar cost averaged during the downturn, and then and now you're on the rise. Are you taking profits or are you holding?
I sold half my profits actually today, and I'm gonna.
So you
wanted to have our conversation today.
Half your position, or half your profits?
Half my profits.
You mean you sold half your position?
So the two almost went hand in hand. So I looked at what I was up as a whole, and then it wasn't like this was tens of thousands of dollars either. I don't want to mislead everybody.
Right.
I took a look at what I was up and then just sold half of it. Which I understand that because I did a tax optimization.
Just so for clarity, it was half profits. That is correct.
It was half profit. And what's interesting on the way that it ends up working, which might be important for people to know, because I don't know if it's going to scale back or not. So I don't sell the whole thing out to take the full profits, because I want to have this conversation with you. But what I know is that some of the shares I sold were at a loss because I used the tax optimization tool. But I did that intentionally, because now I'm up a boatload on what's left, because everything else, because it sold the shares that I bought at a higher price to take a little bit of a loss. But now my dollar cost average for the stocks shares I still have is significantly less, because it held the shares that I was up on, sold the shares that I was down on, which I'm going to use as either a tax loss for other profits, right, to balance that out when I do my taxes. Or if it drops back down, I'm going to buy some more shares again. So it all depends on what happens.
I have a question for you. How do you know which ones you're selling? Meaning, how do you know you didn't just sell the ones you bought at the lower and took a profit versus selling the ones you bought higher, taking a loss?
Yeah. So good thing is this was under my Schwab account. So in Schwab, there's an opportunity, there's the ability to pick which shares you sell and there's like 4 or 5 different options. One of them is called the tax optimization tool, and that will calculate for you which is the best based on how long you've held the shares, what you bought the shares for. There's others like first in, first out, last in, first out. So there's several other categories. The one I always hit is tax optimization because it just does it for you. But there could be other reasons that someone would want to do first in, first out versus
like what?
The other.
Like what? This is very interesting. I did not know about that tool on Schwab. That yeah. I don't know if that's on other platforms. I mainly use Webull when I'm trading. But that's very interesting that Schwab has that. Webull might have it too. I'm actually gonna look for that feature now that you said it, because I don't necessarily trade that strategy, so I haven't used that. But it makes a lot of sense to me.
Yeah, it definitely helps for tax purposes. I haven't figured out why you would not just use the tax optimization tool all the time, but that's a good question.
Yeah, I don't know. So that we'll leave that one hanging for a second, because something you said that I think I can jump in on is I asked you, are you gonna hold the rest of your position, or you're gonna look for probably a price target for the rest of it? So that's what we'll play around with together. Does that sound good?
Yeah, because that's kind of why I held off. I saw that it was dropping, and I'm like, I'll take some of my profits and just kind of sell out and then have a conversation with Marc, because that's a really good question. That's, I think, using your strategy, and this is why sometimes I'll send you a text and just say, hey, what do you think? Because I'm going a little bit off of feel. And when I'm day trading, I'm not using your strategy. And I think your strategy is suited for more the day trading to pick actual in and outs based on just historicals and the ways you do it.
You hit the nail on the head. Fundamentals help tell you what to buy. It helps you tell you what to pay attention to. The technicals help you know when to buy and when to sell. It doesn't mean you get it exactly right, as when we talk about unity, we'll know that's for sure. But it does give you one more tool in your tool belt when you're making a decision, and it's a pretty good tool. That's why the two still coexist together, hand in hand. So, are you ready for my technical analysis on Warner Brothers? I'll show you what I do on my end. Like if you just texted me, this is what I would be doing. All right, you ready?
Yeah. All right. Fire away.
And you can tell me what you think when we're done. So normally I go out and then scan in, but today we had a big pop and there's a very obvious line to me. So I'm going to want to put it in there. And that is this level right here. And I'm just curious, Harry, do you see that, what I'm seeing here? You see how this was the open, and on the open, it dropped down into I have the 180 day moving average. I set it up that way. I can't even tell you why I set it up for the 180, because I set it up so long ago, but that's the moving average here. And look at this, it on the open, because it popped so much overnight, people were going to take profits when it opened, but on the open it popped down to that level. You see how nicely, almost right to that level. I didn't put these in after what you told me. These are already in there. So it drops into that zone. And then that's where either buyers are going to show up to hold the stock up, or that's going to break through that. And then you have big problems, which we'll see, because Unity did that today. So it is going to be a good yin and yang. All right. So it dropped into this 180 zone and then bounced around. There's another indicator here. One thing I'll try to do, because people I don't know, you throw out terminology and it doesn't really make sense. So one thing that I brought up here is the moving average. And this is a very common indicator that traders use, and maybe long-term investors use as well on a longer time frame to see where we're dropping in.
Is that the white line?
It's actually the red line. The white line is the 200. The red line. The white line is the 200-day moving average. The colors are arbitrary. I could have made these any colors I want. But this one, the white line represents the 200-day moving average, and the red line represents the 180-day moving average.
So those are really close. Does that tell you anything when they're close versus when they're not?
They usually, it's the 180 and 200 trade pretty closely.
Okay.
More often than not, more general ones that people will use are the 200-day moving average and the 50-day moving average. The 200-day moving average gives you a sense of dollar cost averaging over a longer period of time, 200 days, versus a 50-day moving average, which gives you what people have been doing more recently within the past 50 days. So there's things where the averages cross. What's that? For a momentum trader, yeah.
Yeah, which I do sometimes.
Yeah, you do. Right. Okay. So look at this one. So we're trying to decide how long do you hold this position? How long do you hold it for? What's your price target? Okay. So the only reason I said I started narrow, which was today's action, is because right here something's going on. Like it kind of didn't quite hit. So it's not perfect. And in fact, if I use a more accurate line would be about here, because it was kind of like holding support, then going a little higher, then coming back in, and then kind of holding support right here. Something was going on here where buyers were still kind of keeping it from falling lower, and then going into the close it obviously. So we just closed. It's 4:12. The market closes at 4 o'clock. So it just fell a little into the close, and that just could be because people are just closing out their positions. There's nothing big going on here, other than to me there's this line meant something to somebody for these reasons. Does that make sense? Like this, because of the way these lines are showing up here, and it seems to be right at this point. There's 2 touch points, one here, one here. Yes, I can move the line. It's not a perfect system, but you can see, generally speaking, there's like a bounce up and then a hit, and then when it hits that line, it does a little like, oh, we want to try to get this thing going the other way, but doesn't quite make it and closes out. Okay,
and that's where we're at today. I wonder if that has to do what would happen if the market was on fire today, like it was yesterday. Right?
Exactly. So that's a good point. It's stock related and it's market related. If the whole market's going down, doesn't matter how good a stock is, the stock's probably going down too. And if it's not, and if it's moving in the opposite direction, that's telling you something about the market as well. So maybe we'll get into that. But so I went. This is the daily. This is actually a 2-minute chart. This was 2-minute price action. If I span out and go 5 minutes, you're going to see a little bit more data, and that's the move you were excited about. Like you said, your cost basis is about the $7 area. So you basically realized all of this move all the way up, not just this little pop this morning, but you saw this whole move. Saw it, you were early to it, which is why you were dollar cost averaging into it over time. So if we go out further, and I actually remember when the stock came public, I think I traded it around here back in 2020 when it was fun to just trade these IPOs. So so the stock during its initial public offering started at 27.50 was its high, and then it's actually been not great since then. In fact, the trend, if you look at this, the trend is still down. We are not really in an uptrend on this stock. And even though you saw a short-term uptrend, which is what we're trying to figure out, like, all right, how long am I going to hold this bad boy? So this is the long-term time frame. And in fact, look at that line I put in from the daily. You could almost see here, there's something about that line that's meaningful too, because the stock got under that line and then kind of came up. And then here was like, it got to that line and a bunch of sellers came in and it landed around here. And then this line here. So it looks like at about $8.58 is going to be a meaningful number for people in that 850 area. If you want to use ranges, let's say 850 to 860. Okay, so that's going to be a relevant number to a certain group of buyers.
Really?
Does that make sense?
Yeah.
All right. So now we go in a little bit closer, and then boom, that's the move we saw today. And even though we were in a recent downtrend here, that move was like, well, here we go. This stock does that. Look at these big green candlesticks. These are the big moves. Big move, big move, big move. But there's still big moves into lower highs, lower high. Actually, this was a higher high, so this is a bit of a fake out because it was a higher high, but then a lower low. So then higher high, or now we're in an interesting place, and it moved on catalyst, so we're in a really interesting place. Whatever people got excited about today, was that a sell the news event, or was that a, oh man, this stock is going to have a nice run ahead of it event? What do you think?
I think it's a news event that, depending on what they say during their earnings calls and confirm, will, I think, decide what it's going to do. But here's something interesting I'm seeing.
Okay.
If you kind of scale back and let me know what your thoughts are,
Sure.
as not being that analytical on this stuff, the drops have been steep. Usually historically, right? It's just been dropping ever since they went IPO. But now, and this is kind of one of the reasons I bought it, it's like, how much slower can a stock like this go? Belly was dropping for the last 3 to 6 months. That drop is leveling off.
Yeah. So, Harry, this is where our yin and our yang meet. You know why I'm saying that? Because I'm also trading a stock that's in a very strong downtrend. And for months now, I've been saying, how could this go any lower? How could this go any lower? And amazingly, it finds a way to go lower. Okay,
it does.
So that's a good point. You see, the stock is in a downtrend, and it's had a good day. But look at historically what's happened. It sees a nice run, drop. That's what you were saying. You were kind of highlighting that. It sees a nice run. Actually, this is about as good a run as it gets right here. And then it starts to roll over, drops, and then really drops. And then when it drops low enough, what you get is a bounce, because people like us or any trader is going to go, how much lower can it go? Bounce. Okay, great. All right, now it's on the uptrend, and it's like the sellers come in right away, and they're like, "Psych, you're not. This thing is not going up." So the sellers came in here. This is kind of a double top here, so that was probably a signal to technical analysis traders or people who trade mostly off the technicals to get out, and which they did. And so they got out all the way here until it got low again, and it got into a buy zone. I would call this whole area a buy zone, because look at this. If we do this, you could see something. There's kind of a little buy zone action here, touches that area, buy zone. And then we broke the buy zone. That's where it gets scary. When you see this, that's a bad sign, which it kind of showed it was. It didn't really do anything. And then it's just been testing that lower end until it broke that. And then this almost here would have been considered capitulation just because of this like relative size, maybe. But it's not really, because the volume was low. So on the bottom, I'm looking at the volume. So you can see the bottoms giving you different information. The most volume was in December of 2022, and it was yellow. My yellow is red. Like these would be red candlesticks on most charts, but I made them yellow because supposedly it helps keep it less stressful. So,
can I ask you a quick question?
Yeah, absolutely, always.
So you referenced buy zones. Are you seeing a time frame that seems consistent when it hits buy zone? So what I mean by that is every time it's hit a buy zone, the buy zone has been on average or a small range of time between 2 to 3 weeks, or that you're not seeing a trend of when it hits the buy zone, how long it stays in that zone for?
It's hard. That's an interesting question, and it's hard to predict because I don't see any of it. Like if this is when it fell into the buy zone in December 30th, 2022, and it had just come off this. So people who stepped in here as buyers had to have a lot of faith, right? They had to, and probably the reason they stepped in, now that I span out, this is my guess. Look at the volume here. That's huge volume on a down day. So it dropped, huge volume drop, and that signaled to some participants in the market that it was capitulation. And capitulation is a psychological phenomenon that when you're in the market long enough, actually look up market psychology. Capitulation usually means the end of a downtrend. And so buyers that picked up on that and not on heavy volume, so it wasn't a strong one, but the price action turned out great. But so I'm going to span out again to get back to your question. You're like, am I seeing a pattern? I don't know, because if I came in, it was a downtrend. Here's where your opportunity was to make big money, right? But you didn't have this information yet. You only had this information. So it could have done this and like completely went to like a penny stock, which it really kind of is now, even because it's under $10. That's almost like it went from a player to back to the miners.
What's interesting is in Robinhood, how it gives you what the analysts think, the buy, sell, and then the predicted number.
Webull does that too.
$22 is what it suggests Warner Brothers should be
for
at.
Warner Bros. Okay, so let's take a look at this, because here's the analysis, and this gives me this thing here, this growth analysis, and then but there's something more specific to what you're talking about, unless they've changed this around. Part of this is I have the trading locked, so I don't know if that's messing with anything. But that's just so I can go through here without revealing too much of my stuff. Although
I'm sorry, it says fair value is $20. My bad, but uncertainty is very high.
Yeah. Oh, this is going to be interesting. I'm really going to have to figure something out because I just realized something. All right. So, go back to the chart here. So back to your question. I wouldn't have known. Obviously, the only pattern I would have seen here is a downward pattern, and whoever came in here took a risk. And then when they saw this candlestick, the next group of buyers become more certain. So like it makes a move like this, and then buyers go, oh yeah, it's uptrend. This is it. This is the bottom. And they're riding that all the way up. And then here, either you're taking profits. So I'm going to put a line there because that's a big thing, right? So it broke through this area, retested this area with a wick. This is a wick when it's thin versus this fat body. When there's a wick, it shot all the way up here, and then the sellers just pushed it all the way down, which is a very bearish signal. As you can see, that's how it played out bearishly. It went down.
Sure.
And then same thing. It comes up. You see this big wick, sellers pushing it way into this zone. And then you can see opportunity buyers came in because they're like, oh, it got pretty low. There's going to be a bounce, which it got. It bounced back up. And then it consolidated and dipped into the zone we're talking about. And now in terms of a pattern, longer term, I need 2 points of reference. So there's 1 point, and we didn't get the next point of reference, because if I didn't know this part of it, I would have drawn a line here to here to here, and I would have seen this as a V-shape, maybe a V-shaped recovery, which it's already not, because it's not a V-shape. It would have been maybe a W or a U at best, where you're thinking, oh, it's going to go like this. But instead, it went up to this area. And in fact, it didn't get all the way up. That's because it's in a downtrend. And not that people knew that at the time, but they said, oh, crap, they're looking at this. Technical analysis traders are looking at this area. And they're like, do I think it's going to break this area, or do I think it's going to fold? And people bet that it folded, and it folded up until this line here, where buyers are like, okay, there's something happening in this zone, and they went to and the traders saw that, and now a buy zone area is being created here. And now in retrospect, I can tell you what happened, like a forensic scientist, because I have 2 points of action, 2 points of data that another person can look at objectively and say, I don't understand all of this, but I know something happened here and something happened here. Right? Is that helpful? Yeah. Okay. So like getting into where we're at now, because look, it went up and then a lower low. So high, lower high, lower high. Now you got to go, is it going to break out? Do you think it's going to, if I was playing it, and I had a very ambitious price target for it, my price target would be almost $15, because I would play it. If it's a reversal in trend, then it's going to go up here. And in fact, this is probably what's going to happen in the near term. And this will be cool, because by the time I post this video, we'll have more information to see if it actually played out the way I'm thinking it might play out. But I think it hits $99.68, unless it already hit that. So let's go back to the 2 minute real quick. So $9, what I say, $9 and something. So it hit $9 in pre-market, or no, actually after hours it hit. No, pre-market. This was pre-market here for this morning. So in pre-market it hit $9, and then it fell from there, retested $9, fell from there, but it's still kind of consolidating from this higher part. And then it consolidated like a zipper, which means not really a lot of action, which is not unusual in the pre-market. And then when it opened up, sellers and there wasn't enough buyers to keep it up. But then when it hit this moving average, now we get to the moving average is another tool. It's like, okay, that was a price of entry, and there were buyers that showed up there, but look at how they played the bounce. I'm going to draw another line here so you can see
Okay,
this. They played the bounce almost to the area of consolidation. This shows you the psychology, right, of someone who's doing technical analysis. The people that got it right were betting on this because they got in here and then they rode it up to here and sold, took their profits. It dropped down into this line, which I'm not even going to tell you what it is because it has a whole nother explanation. It's VWAP for people who already know what VWAP is, but that's another meaningful line indicator that people use. And so it dropped into VWAP and there were still buyers there. So it's still traded above its volume weighted average price. So it traded above that actually most of the session until it broke below that. And again, you can see once it breaks that area of support on the daily, then you saw those technical people were out and then other people were out and no buyers showed up and then it's out. So right now going into the close, the sentiment is bearish.
Yes.
Because you actually closed lower than it opened. So based on today, I would think.
I don't know what's going to happen.
Exactly.
I don't know what's going to happen. So I'm going to get at least rid of what I bought it at the higher number. It takes a little bit of text loss, see what happens, because there's still enough in shares that if it kept riding up, I was going to be happy. But if it went down, I was going to be sad. So I'm like, okay, I'm going to get rid of some of it, see what happens. And honestly, tomorrow is going to be a very interesting day to see what really does the market think about the breakup or the sell of certain divisions of Warner Brothers. I think we'll have more sense tomorrow. It's really how factual is this? Is this going to happen? And that's the catalyst or the drop, right? That's how that's what I'm seeing. And that's what I'm thinking, at least, as I'm kind of doing a little bit of a wait and see approach right now. If it hits $14, $15, I might sell another half of what I own. And then rest I might just
go back 1 second. So you said once it hits $14 or $15, is that what you said?
Well, that I'm just going off the number you said.
Right.
If you were going to be aggressive, yeah.
But we're not going to. So here's kind of something you alluded to earlier, which is over a time frame. What would I guess over a period of time? Because when I said $15, it would have to move to get to that $15 mark. It would have to move 1, 2, 3, 4, 5 standard deviations, meaning it would have to move 5 times its normal amount to hit $15 tomorrow. So not that you were saying that.
Tomorrow.
No, and I'm not saying you were saying, I'm not saying you were even implying that, but I thought it's worth noting for people. That's another thing we're looking at is standard deviation, because when you don't have these big blue lines or you don't have the indicators that are giving you obvious things to look at, the next thing a technical analyst will look at is standard deviation. So the next trade move is like, okay, 1 standard deviation up. And in fact, if you look here, it almost falls precisely on the standard deviation. It wicked up near the standard deviation, but again, weak because people were scared. They're like, I'm getting out before other people think they're getting out. So if the standard deviation is your target, these people knew and they're like, I'm getting out before other people get their target. That's the game we're playing, right? Yeah.
So let me ask you in your chart here, this is now what I'm thinking. The institutional investors, does it tell you what percentage in this chart are institutional investors? Because now what I'm thinking as we're having this conversation is that's what's going to be the next drive up on this stock is if the institutional investors are now meeting with their C-suite people and they're sharing their vision of the breakup of the organization, that is going to drive the stock up because there's going to be big buys if they can get to these hedge fund managers and say, look, this is our vision. Our stock has been, because those are the conversations they have that we never are even aware of, right? You got people C-suite at Warner Brothers going to these big hedge funds and saying, hey, we've been down since we IPO'd. Our numbers aren't where we want them to be. This is our vision for the next 12 to 24 to 36 months and why we believe we're going to be able to have a significant rebound. And based on the story they're telling, these hedge fund managers say, you know what? I'm getting in or I'm not getting in. And if all this information that was the catalyst of today is accurate, that's what I would assume that they're doing to the hedge fund guys. So in the next tomorrow or 2 or 3 weeks, however long it takes for them to get this story around to the hedge fund guys to see if they can get a big fund or 2 or 3, to invest in Warner Brothers vision, that's going to drive it up. So I know sometimes we can identify currently how much institutional investors are in there, like what percentage of the outstanding shares are institutional, right? Is that something that's in there?
Right. You know, they used to have the distribution between, actually, this is, position cost distribution. No, that's something else. Order flow is something else. So like order flow was out. It was negative for the day by a significant amount, 19 million, which is more than usual. It was up for a couple of days. So it's almost like somebody anticipated this move. Look how much volume came in. And it was upward. It was an upwards trend. So it's not that unusual. But then today was just like a lot of that volume went right out. A lot of the order flow, as I interpret this part of it. There used to be something in terms of, and I think there might still be. I don't know why I'm not seeing it. Oh, here we go.
Ameritrade used to do that, but I don't know if Schwab does. I'm taking a look at Schwab right now to see if it's showing it.
So you see the analyst price target is
here.
here.
So here we go. Sorry, Mark, not to cut you off, but in Schwab, if you go to share profile, it says shares held by institutions. So right now, 58.54% of the shares outstanding are held by institutions.
Okay.
And again, I'm spitballing. This is more of something that is a thought that, and this is why we have these conversations, is exactly. You start thinking of all these different angles and these rationales, and got to try to be non-emotional about these decisions, because you can convince yourself one way or another. But it's something that I think is just interesting part of the thesis that I'm developing in my mind, which is, if this is all true, and 58% right now of the shares are institutional, if that bumps to 65, 70 because of the breakup of the organization or what have you, that will drive the stock up. And if the hedge funds don't believe the story, then it's not going to.
Yeah, what you're talking about right now that's a very speculative way to play it. That's where your gut. I don't disagree with you. I think it's an interesting road to kind of ponder.
Way to put it, speculative. Very speculative.
Yeah, very right. It's honestly, even in technical analysis and speculation, I don't know which direction it's going to move. I can only look at the historical and then kind of play a psychological game, what I think other people will do. You know what's awesome? I'm not going to have time to get to Unity, so maybe we'll save my trauma for another episode.
I like it,
but I will say, let's just wrap yours up.
Yeah.
So this is the way I would play it. Is this is let me get in. I need something that's going to give me a little bit more near term. This was our buy zone, Harry. Oh no, this was today's. So where was that? That might be a supply zone. So there's a demand zone where let me go back out so I can make sure what I'm looking at is what I'm looking at. No, we're hitting. That was the this was the. Before it was support up until it broke support, and now it's resistance. And so what we're seeing on the daily is that it went into resistance, it tested resistance, and failed. So that is bearish. So if you looked at this, go ahead.
Let's play a game. This could be interesting for anybody that might be listening, and I'm just interested to see what we would come up with, right? So I'm going to throw out, based on my kind of looking at the trends, what I think if I'm going to rebuy back in at what price in my mind is like my price target. And then I'm going to the sell thing, honestly, I can't predict. So I would go off of your recommendation, off of like where I may sell at. But based on what I'm kind of seeing, what I have bought at, and what my current dollar cost average is, right? So where I'm at. So I'll tell everybody that's listening that my current dollar cost average on the shares that I have is, drum roll please, $7.72.
$7.72. Okay.
So based on what I'm currently at with the shares I have, because of what I already sold, I would consider buying more shares if it gets under $8 again.
All right, so that's what that's what I heard you. That's what I heard you alluding to. I wasn't sure before because it seemed like I was thinking
Yeah.
you were going to close the position out entirely, but you're telling
No,
me you're
yeah.
going long. You're in more. You're playing a longer game. You're not day trading it. You're not. You're swing trading it to investing in it. You might even be an investor at this point if you're thinking it's going to those higher numbers, because it's going to take a longer time for that story to play out. And so if you're like, I'm going to buy into that story.
I'm a
Before
hybrid.
I tell you,
It's a hybrid strategy for me, right? So some shares I'm going to keep because, again, I like to invest long term in companies that I use. That's just a way I like to do it, because then every time I pay a monthly bill or something, it just feels a little bit better that I'm paying into an organization that I'm part of, especially one that I know I'm going to keep it long term. But I'm not going to keep the amount of shares that I currently have, right? So I still believe that there may be another swing up along the way where I may be able to do kind of like what I did today. But
right.
at under $8, I feel like I might buy back in. But I'm interested on what number, and this is the game I was alluding to.
Yeah, I'm telling you because I'm seeing something else. Then near term. So this was the last 3 days here, right? Including today. You can see this is when that big move started. This is when the inflows came in. I'm going to draw a trend line here so everyone can see it here. Touch point, right? Second one here. Then here. Then you can see it even kind of tested into that zone. I'll highlight it for you. Whoops. Just let this go. Okay. So I moved it a little bit. Hold on a second. I want to try to get this. You see what I'm talking about here, though, with this trend line on the last few days. Whoops.
Yeah, shin through the roof. And then down.
Yeah. So, but not. Yeah. No. Wait. It broke that trend line. This one that was forming here with these little touch points was broken. That's why you saw such a dramatic downward move in the end. So that's bearish. This would be your point of resistance. So it needs to break 858 and go to like, if it breaks 858, it's in the resistance zone. And if it breaks 882, and depending on what volume it breaks it, that's where volume matters. Because if it breaks it because there's just not a lot of action, and so buyers or sellers could dominate just because there's not a lot of people on the field, and whichever person is on the field is going to be stronger that day. Does that make sense? If there's a lot of buyers and sellers, you get a more accurate reading of everything that's going on because you have a lot of people playing. But when you have less people playing, then it's easier for a big player to move little players.
Yeah, that makes sense.
Okay. Yeah. So right now it's like couldn't be any more textbook in terms of we're testing resistance. So either tomorrow it is either going to break resistance, consolidate, meaning it just trades in here. My guess, honestly, based on our conversation, is I'm leaning towards consolidation. I bet it doesn't trade very much, and maybe between the $8 and $9 zone in here, like along in this area. Yeah. And then we might have to wait a couple, and it's Friday, so Fridays are weird too for other reasons, options expiring and things like that. And so we're gonna have to wait the weekend till Monday before we really get a sense of direction, what the next move for this particular stock is going to be. And this is not including the macro picture, because if the market tanks tomorrow, and the market's kind of looking wobbly overall because of the NASDAQ, and there's reasons for that, but if the market's bad, I mean, it could just drop in because the market's weak, and this is not a strong stock.
Yeah,
in general.
So that would be your low point entry of the information you have now.
That's a good question. So let's do that. So I'm going to put a horizontal line right here, because again, you see how this is the consolidation. It rose up to this line, broke down, and then consolidated to here. So this level 837 is still in the zone. So 837 is still like within the short time frame. So within a short time frame, a move in this stock, I'll draw one more line just so we give you the broad range, because I think any of these could play out. And in fact, I'll give you the full range, because it could drop all the way down. And actually, this would be either the buy scenario or the get out of town scenario would be the 747 level. So 747. If it goes down to 747, that to me, and if it goes down to 747 on a huge amount of volume, it could mean capitulation. I don't think we're going to get that clear of a reading on it from this information, but that would give us a bigger time frame and decision to think on, and stronger. It would be a stronger indicator because of the relevance over a longer time frame. So my guess would be no lower than 747 tomorrow. If it breaks 747 tomorrow, then then I wouldn't touch the stock with a 10-foot pole.
No, I mean, if it drops that significantly in one day, I'm
standard deviation.
I'm asking more like
5 or 6. Yeah.
I'm saying like more like if I'm watching this stock for the next couple of weeks.
If you're watching to get back into it, to buy a position, I would watch the where I'm blocking it now, but it looks like that 837 level, 830, something like that. What does this say now? This is the countdown clock, but it's blocking my number. 837. 837 would be a very realistic drop, and it would be interesting if it drops to 837 on a lot of forget about the volume. If it drops to 837 and then it rebounds, it could rebound. It could drop to 837. Day traders and early morning traders, this is the busiest time of trading, is on the open at 9:30 a.m. or at least around the open. So maybe 30 minutes pre-market, the open, and then up until 11 o'clock. And then the middle of the day is just, a doldrum. And then the end of the day is another set of traders, or maybe the same ones that are trade morning and evening, come in like an hour before the close, 3 to 4. Okay. So for you, price targets in the morning, I would watch the 837 level. If it holds that level, that's the part where that's where it's like annoying. If you're trying to day trading it, right? Because you have to watch it, and it won't. If it starts to drop, you won't have time to react. It'll drop 837 and drop right into that 794 before you even have a time to blink your eyes.
Well, I'll just share with the group that probably my approach, again, because I'm not looking to probably day trade it tomorrow specifically, is to take more of a wait and see approach. But if it drops below 8. I don't think I'll buy, because to your point, it's Friday. I don't want to go into the weekend with that, but I'll be looking at it pretty strongly on a Monday morning if it's below 8 to see, okay, what's kind of happened over the weekend, and how are investors feeling going into a fresh new week. So that's going to be kind of my approach.
I agree with that 100%. So I think don't do anything tomorrow. You still like the stock. You're looking to get in on dips. That's your mentality as of this moment. So you're looking to still play this. So I might not do anything tomorrow. I might just not. This is where you and I have differed from time to time too, because tomorrow's going to be probably emotional. And so I would just not do anything tomorrow. Just let that price action, just let it do what it's going to do. And if you miss it, you miss it. If this happens to be, it dipped into here and then it jets off, then fine, you still have a position. It's better.
Exactly.
In the end, no matter what, you're either going to feel like you bought too much or you didn't buy enough. And if you're going to feel one of those things, regardless of your trade. So it's better to feel like you didn't buy enough, because it means you made money and you're going to take profit, than to feel like, I held too much or I bought too much and then lose a lot. Like I'm sitting on one of those right now. Well, so is that pretty good? You feel pretty good about this?
Yeah. I love talking about it. I got to say, I love seeing, and this is why you're a technical trader, right? Like, you just geek out on it and you get so passionate and the excitement and all that. It's kind of awesome to just kind of be the fly on the wall watching you just get into these numbers and have fun. It's like me playing Texas Hold'em.
Yeah, it is. And in fact, that's interesting that you brought that up, because we played poker with each other a lot when we were kids, didn't we?
It's probably why I'm pretty decent at it now.
Yeah.
Because I used to lose to you all the time when we were younger after we find my strategy.
I know. I'm never sure when to bring up the $1 billion. I don't want to bring it up. I only bring it up in terms of fun, like for you and I, about our
checks
billion,
in the mail, bro.
Our billion.
Checks in the mail.
What's that? Checks in the mail. I know. We're going to get you there. We're going to get you there. We're going to make some good trades together, and people can follow along or not. And this is 100% not financial advice. I am not a financial advisor. Harry is not a financial advisor. We are retail traders. If you are a retail trader and you enjoy conversing and doing what Harry and I just did here, then cool. hang out with us, like, follow along on this journey. And I think that's a good note to leave on.
I think so too. It was good talking to you, buddy.
Awesome, brother. Yeah, it was good talking to you too. And I'm looking forward, like, you and I will touch base tomorrow, and we'll either do this or we'll just text, and I will I'll post it somewhere how it played out.
It will be very interesting watch, fun watch, probably a couple of cringe worthy moments, but I think it was good.
That's awesome. That was super fun, man. Super fun. We were only to go 30 minutes. We went 45. So that's always a good sign.
All right, man. Love you.
Love you too, brother. Peace out. Everybody have a great time. Thank you for joining us on this episode. Follow me on Instagram, because I need to build my Instagram account, and I'll tell you why in another episode.
Bye.
Thank you for watching this episode of The Money Adjustment. If you want more, like, comment, and subscribe. You can follow me on X at Marc Kramer. Until the next episode, stay healthy and wealthy.